Okay, so we are about to start this third session today. Sorry for the delay. We are still waiting for our fourth panelist who is arriving soon. But actually, I think we need to start maybe considering that we are already 15 minutes late. So our session today is financing action from transaction to action with payment against verified results. So this morning, actually, we revealed the Great Green Action, and we talked about this initiative, which is about reforesting Africa and or bringing forests back to Africa. And this initiative is mainly done with communities, and it's hands in hand with communities. And I think actually the previous session, when we had the project developers, we talked about the crucial role and the important condition of engaging the communities and working collectively with them, not only for the success in terms of implementation on the ground, but also for the permanence of the projects. We are talking about nature-based solutions, and these projects are 30, 40 years, time. And actually, we need to find the mechanisms so that we... Daniel, hi. Thank you for coming, and sorry for any misunderstanding about the location. So again, we need really to find the financial mechanisms to support these type of projects. So here today we have with us different panelists with different perspectives, and I think actually the fact that you come from, with different backgrounds and understanding, this will ensure actually the richness of the discussion. So we have with us Stefan Schurig. 7 years ago, actually, you started this amazing platform, which is Platform F20. And you have been so far the Secretary General, but you are continuing the engagement and working with the platform. We have Christian Rode, who is the CEO and co-founder and CEO of one of the Great Green projects involved in this Great Green Action, which is 1MTN, and it is in Uganda. We have Dr. Antti Sarnio, who is the founder and CEO of Air Impact, leading this Great Green Action. And finally, and excuse me if I'm not pronouncing very well your name, Daniel Ortega Pacheo. Wow. So co-chair of the expert panel at the Council for the Voluntary Carbon Market. Thank you for being with us today. So I will start with my first question. When we talk about finance for nature-based solutions, from your perspective, what are the main challenges and what are the opportunities as well? Like, these projects are mainly in the global south, okay? And the money may come from the global north. So what are the challenges that we have? And at the same time, what are the existing solutions to fund these projects? May I start with you?
To start? Okay. And I can keep it very brief because I'm actually very interested in your answers as well. And you seem to be knowing the on-the-ground business much better than I do, I have to say, because the Foundations 20 platform is a group of 80 foundations that, as the name says, focuses on the G20, and it focuses on updating and changing G20 politics so that it is more aligned with the Paris Climate Agreement and the SDGs, and it's on sustainable finance, and on carbon mechanisms. So it's more the multilateral public finance level, I would say, rather than the really implementary level where you need to find the funding for mangroves projects or reforestation or soil restoration projects. And I'm interested, of course, to hear how this works from our perspective, from the, let's say, from the policy perspective. Of course, the question of linkages between funding coming from the multilateral agreement level, be it via GCL, the Green Climate Fund, or be it about nature funds that are upheld. Of course, the one key issue really that is a challenge and that is important is credibility. So, and the additionality. So is this funding really used in that spirit as it was basically designed, and how would you prove credibility and additionality? And then, of course, when it comes to climate projects, the whole series of criterias and standards, and what kind of standards, and gold standards, or the new Article 6 standard, and so on, is of course then the let's say the ABC of proving basically additionality and credibility to these funding projects. Now, from my own personal perspectives, having worked on renewable energy projects in Africa, I can say that you have to distinguish between public funding, private funding, and public-private funding. They all have their own sort of, let's say, rules, how you get access to this funding, and it is very much depending on the local circumstances. And there is not one Africa, there is really local circumstances in different countries. Like Ghana is different from Tanzania or from Sierra Leone or from Cote d'Ivoire. And there, I would say the public part really depends on the leadership. Do you have a strong mayor of the different communities, or you have a strong regional government there in place that enables to make this switch between public funding, and that enables, or that is possible, or that is able to sort of gain private funds to these projects as well? Is it a reliable governmental system, and so on? And when it comes to private funding, the main question that you get is risk. How do you know, how to make sure that the funding ultimately is somehow paying off? And I hope this makes any sense in maybe providing you a little segue for your day-to-day experiences on the ground.
Just actually to add something. So actually you mentioned two important ideas: credibility, additionality. Okay. And from a project developer perspective, so I know that many were like, they see a lot of pledges, but very few transactions. So what do you think?
I agree. Yes, absolutely. Thank you. Thank you to having us here. One MTN stands for 1 million ton nation. And what we do, we restore degraded lands in Africa. We started in North Uganda by planting polyculture and indigenous bamboos. So coming back to your question, challenges and opportunities, probably we can write a book about it. So 45 minutes, what we have left, is definitely not enough time. But when looking my notes, then basically I have 5 challenges, what I see right now in terms of projects on the ground. First of all, of course, it's about risk management. One investor told to me that, you want Africa nature-based, just give me one. But 2 of them together, it's too risky. So, of course, we see the political risks there. We see the, nature risks there. I mean, there is more than one risk category, what the investors, off-takers are thinking of and definitely calculating. Another one, of course, is to, valuation methods are super complex. How you really price the nature, how you really price the biodiversity enrichment, what we do as well. Some species in our community food garden is not existent anymore. So how to price that? Of course, we have our internal cost and we have our budgets and so on. That is the most easiest way. But how to really price the effect and also the impact what you can do for the nature, for the communities, for the people. The third one is lack of standardization. Totally agree. All the verifications, all the registries, all the policies out there. I mean, we need to act, not create an additional burdens. Of course, everything needs to be transparent. Everything needs to be high quality, but at the same time, we need to move faster. And then, of course, if we're talking about nature-based projects like what we do, this requires significant upfront capital. We need to purchase the seedlings. We need to hire the labor. We do leasehold concept. So basically, we lease the land from the communities, from the private donors. Normally, they ask 3 to 5 years upfront payments. That's already a significant amount of capital. Of course, that is creating an immediate impact as well to the private landowners and communities. But on the capex side, it is the heavy burden what you need to unlock before you can even start. And last but not least, in terms of the challenges, I will finish with the speed. We are too slow. Everything what we do, we are too slow. Coming from the digital nation of Estonia, we can incorporate a company in 10 minutes. So, I mean, I have used with a super fast moving in a startup mentality, in a lean startup mentality. But all the things what we do right now in terms of the nature-based, in terms of the climate funding, there is a lot of good talking. Like you said, there is a lot of good pledges, but the action is, it's coming, but it's super slow. In terms of public funding, yes, I mean, the period are even longer than the private funding. If we're talking about the blended finance, then, two forces are coming together. It's even more complicated sometimes. So in that sense, yeah, there is more than one challenge definitely for the project developers like us who really want to scale fast. Our mission is to restore 1 million hectares of African land, degraded land by 2030. So we have actually not anymore 7, but 6 years to go. So, time is running out. Now about the opportunities, what you ask is that we need to value, I think, nature more than we do right now. All the new good technology is popping up, like direct air capture, which is good. I don't tell it's not good, but at the same time, as a business model, as a way to how to really save the nature, it's not sufficient. At the same time, when all the forests are cut down illegally to have the charcoal, for example, in northern Uganda, so you can put as many direct air factories around there, but that doesn't stop illegal logging, for example. So we need to definitely value the nature more. Regarding the opportunities as well, what we approach is that we do the validation every year for our project, meaning that every year we know exactly how many offsets we will generate, how many credits we will generate. So meaning that we can also mitigate the delivery risk of the credits in that sense. Technology we have talked about. We are in a digital innovation pavilion. So technology can be one of the biggest savers actually. How to really leverage, how to really pull them together. And the last but not least, I will address the blended finance, what we already actually been talking about, opportunities.
Okay. Antti Sarnio from Air Impact, and our angle is basically how do we scale this because deforestation rate is, according to some statistics, was 4 million hectares on year 2022. And that basically means that what we are now addressing is just maybe 20, 30 times too small. So we need to find ways to scale this. And today we are discussing, or the industry, if we call this as an industry, we are discussing new standards which will make sure that the quality of the projects are good and so on. And then probably investors are very focused and buyers focused on who is the project proponent, who is the developer. But I would say that if we take this large scale angle and we understand that we need to build infrastructures which are lasting for 30, 40, 50 years, it's not what is the certification standard, that's not the key. It's not who is the project proponent, that's not the key, because we don't even know if those are there. Well, our mission should be to plant the forests which are there after 40 years. So only thing what we should be looking really is the community. is that the community is there and it's incentivized to keep the forest there. And I think that's, if we should focus on one thing, is to build financial infrastructure which makes sure that the community is going to be paid 20, 30, 40, 50, 60, 70, 80 years after this. And this is a challenge, but it's we already have trust structures which have a 100-year time perspective. We have banks which are hundreds of years old. So I think it's completely feasible task to do. Demanding that we build project proponents or certification standards which are lasting 50 years, I don't think it's feasible. Like we are not that good. Like, but building that kind of financial structures is highly feasible. Yeah.
Daniel.
Well, let me add some comments to this. First, again, apologies for the delay. I got confused. In the Greece Zone, it happens to be another innovation hub. So, here a few clarification in terms of concepts. First, when we talk about nature-based solutions, it's not only south, right? Nature-based solutions are happening also in the global north, and they are proven to show that they can deliver on impact and they can be linked to private finance. So that's the model that we want now to replicate in the global south. Second, when we talk about nature-based solutions, it's a very wide family of potential, right? I will refer particularly to emissions reductions type of activities, because when we talk about the underlying commodity that is linked to the financial asset, then we can talk about how can we make that fungible and liquid. Because of green infrastructure is also nature-based solutions. It can help to adaptation, but it doesn't mean that it translates to emission reductions. So because I'm part of the integrity concept for the voluntary carbon market, I will end up in this specific domain and land my points on that. When we talk about finance and we want to deliver on the scale, I think it's the only way possible to deliver on ambition. To achieve a scale, when it comes down to finance, we need to first determine what are the attributes of quality that we want to deliver. And we need to ensure that it's consistent delivered through the different crediting programs and through their methodology. So I do feel and understand your concerns and the need for this to be resolved. There is a need for delivery on consistency. There is also a need to reduce transaction costs on the process. And perhaps our theory of change is pretty simple. If you build integrity, a scale will follow. And this means not only environmental integrity, which is the emissions impact component, but it also has to do with governance. And that is how carbon crediting programs can make decisions, how they develop the standards, whether it's through consultative, open, and transparent process, and how they make information available to the rest of the public, right? Whether or not they upload the documents of the project so people can go about scrutinizing how emissions were measured and reported and so forth. That's one component. The second, that has to do with emissions impact. You did mention one central concept when it comes down to carbon markets, and that is additionality. When we refer to additionality, we can refer to financial additionality, and that is the notion of the voluntary carbon market, and perhaps the beauty of it is that it will make available financing that otherwise will not occur, and therefore it makes the project feasible. Without that specific characteristic, we can find different instruments for financing that action, but it's not necessarily compatible with the voluntary carbon market. And that's why we remain to believe that if we need everything everywhere at once, the voluntary carbon market is one complementary tool. It does not replace decarbonization efforts by company, governments, and civil society at large, but it can be delivered. And the third component of this overall integrity, in addition to governance and emissions impact, it has to do with safeguards and it has to do with sustainable development. Not only in the global south, I think it has to do with the entire system. And that's why much of the financial sector, when it does environmental and social due diligence, it does it regardless of the jurisdiction. So the integrity concept has introduced this. It was not absent in the past, but perhaps it was not consistently delivered by carbon crediting programs the way they managed safeguards, right? You had at-risk with one approach, other carbon crediting programs doing differently. So we need to ensure that it's consistent and that it's compatible with what is already out there. The IFC have been doing safeguards since forever, and there is no large public funding or private funding being deployed without a real sort of due diligence process on this area. And the second, sustainable development, is because we need to understand when and how we can identify, manage, and report the specific direct impacts that can be attributed to the activity with any of the SDGs. And if we can make that happen, we can make the carbon credit not only high quality and high integrity, but also compatible with impact finance. And that also brings to a different level of scale. The voluntary carbon market is a 2 billion market. It's expected to grow to 50 billion. But if we can link that back to impact finance, you are talking about not only 900 billion, which is a market for green bonds, but the 3 trillion that is already delivered through different ways of impact. Let me stop there just as a short of introduction, but I will be happy to come back. Thanks.
Okay, so a lot of ideas. I'm gonna try to take some of these ideas to introduce the next question. So one of the main important topics you mentioned here is that integrity, but it's not only about having the right documents submitted, approved, etc. It's in the integrity in the implementation of the project, and that impact that needs to be measured and verified. And of course, actually, Antti, you mentioned the important role of communities, and at the end of the day, those communities who are central in these projects, they are somehow in a dilemma, like whether actually they need to keep the trees or to cut the trees, but actually they need to be incentivized for keeping the trees. So, and how to unlock all this finance that you mentioned, not only the voluntary carbon market, but the impact finance, which means actually we need to show impact, we need to show outcomes and results. So actually, Antti, Air Impact tried to propose a new structure that could help the industry grow and actually address this financial issue.
Yeah. Thank you, Nihal. So, we work on several levels. We work on a project in Tanzania in Guru Mountains. Then we work with projects in various parts of Africa with the Great Green Action Network. And I come also from a startup funding background, so I understand that there's some risks also in this, and like you said, that there's components like Africa and then nature-based projects. It's like a double risk basically. So, and at the same time, when we are looking at the scale what we need to reach, I think we are talking about in a ballpark of $50 billion or $100 billion, what needs to be channeled into these projects eventually in order to make a change in deforestation rate. So obviously there's a need for new kind of financial structures which enable that. And anybody can understand that kind of a channeling, for example, $5 billion into Africa, there's a major risk that it doesn't end up into an impact actually if we don't have this infrastructure. So that's why we started building in our own project and with Great Green Action a trust model where the funds are sitting in a trust, and then we have a pre-agreed milestones with the projects, what they need to reach in order to get the next funding tranche. And this, first of all, this brings transparency to everybody. Secondly, it basically almost like insures the fund investor from non-performance. So if a project is not performing, these funds can be allocated to a performing project. And I made a very quick calculation that we could even have a 50% failure rate, complete failure rate in terms of a project portfolio, if we can kind of early recognize that the project is not performing and then reallocate the capital. So I think this is a direction what we see, whether it's the actual financing component, whether it's carbon forward or rather a green bond, which could have some other collateral components there. I think we should start developing that kind of, and I completely agree that we should tap into the impact funding and then the bond market, because the volume what we need is there.
And just actually to to add something about the long-term payment for the communities.
Yes, so yeah, of course, now the recent recommendations for the carbon standard is that we should have a 40-year period of permanence there. And well, it's a quite long period for any organization to make commitments that, okay, this will be done. So how we have organized this and how we are going to organize this, that those payments to the communities will come over the 40 years for sure through the trust structure. And I don't think that there are any other ways actually to implement this easily, at least, but happy to hear.
No, I think that's a very fair point, that you're saying, there's no point in just finding a model that works for 1 year and then just leave the space. I think even better if you can design, or if there's a business model behind it that would actually make it important to not clear cut the forest, or to not regenerate the soil or degenerate the soils. And this can happen also through private standards, for example. I've just been working with a foundation called Cotton Made in Africa, who are running, we're trying to produce more or less sustainably produced, like critically sustainably produced cotton. And once they work with this cotton associations, there's a business model behind producing the cotton in a certain way, namely more sustainably, more organically. And once there is a business model behind it, it can really work. Otherwise, if you don't change the business model behind cutting the forest down, then it is hard to keep this sort of artificially maintained on that level.
Yeah, fully agree with that. And some thoughts what we've been thinking and planning to implement it. First of all, is if we should in every area analyze that what are the causes for deforestation. And one of the causes typically, at least in Africa, is making food. So you basically collect the wood from you make charcoal. We need alternative solutions for this in order to kind of convince families to change from this. And of course, it's an extra effort for the family, especially ladies are collecting mostly in the wood, and it's hard work. So that's one component we should look into. But then other thing is the agriculture part, that what are they farming currently, and how could they kind of go into higher yielding, higher paying crops, basically. And many times, of course, I have very limited understanding on, I'm not specialist on, but what I have learned is, for example, some crops like vanilla, for example, would make a higher payment for them. And when I have asked from the communities that would you like to move into there, that absolutely, then we can make money. That's the answer. But it would take 3 years or 4 years before vanilla start producing. So somebody has to finance this part. So we need holistic thinking in order to solve this. Otherwise, we'll not solve things. Yeah.
Okay, Christian, how do you? I mean, you have been exposed actually and discussing the solution. How do you think actually it could be? First, actually, do you think that it's one solution, say, major solution for this problem, to transform the pledges into transactions, and potentially how to make it happen, how to implement it?
Yeah, thanks. Great question. Um, we have been discussing with the different off-takers and investors from the private and public sector. And actually, the way how Air Impact is right now structuring the trust as kind of a portfolio offering for investors and/or off-takers is making a lot of sense for ourselves as well. Because, for example, right now we are scaling up. First 400 hectares is already restored and planted. Next year we want to do 2,000 hectares. Over next year we want to do 4,000 hectares and so on. So it's a balancing act as a project developer between scaling up your local operations that you don't take too much in, and at the same time also having the capital availability on another side, because again we are talking about a lot of upfront capex costs. So in terms of the milestone approach, what Air Impact is advocating and promoting, I think it makes for us, for example, total sense, because there are some funds, investors, etc. Their ticket sizes, more or less, investment sizes are below 1 million, and then there is an emptiness between 1 and 10 or 1 and 20, and then there is again some players coming in post 20, post 30 million. So in that sense, we are right now actually in the middle stage. So we are not too small, we are not too big. And how to really make it attractive also for the big players, at the same time de-risking their investment case. So that's why I believe that this milestone approach and trust-based approach with also technology involved is a good thing for industry, especially for a nature-based.
Sure. Daniel.
Well, yeah, just a few thoughts. This is a very interesting conversation. Thank you. I'm being in several panels, but usually you do not engage. It's mostly, speaking in general. So let me reflect on a few things. First, the right tool to the right project, right? So that we agree that voluntary carbon market does not fit every single financing need. It needs to demonstrate additionality, and it will be costly. Hopefully, it will reduce the cost across time because now we have rules. So coming back to the example of Estonia, that I think is wonderful to make the case. So it takes 10 minutes to get a company because you have first rules and second a culture that respect the rules. We didn't have that in the voluntary carbon market. And hopefully now we have it. We have the set of rules and we are creating the culture to respect integrity throughout. And if that's the case, then you can introduce technology, right? Because you can package information into a block with trash. But now that we have high integrity carbon credits, we can definitely translate this into legal contracts that can provide an assurance and can be moved into a different type of coins or tradable units, let's say. So technology plays a significant role on the scaling of the market once we have the rules and once we can also enforce the rules, right? We are an independent body. We are not intergovernmental. Nobody will trust that we will go about policing anyone. This is private to private. However, we have seen that the UK just recently announced that it will inspire their new public consultation on our rules as ICBCM. That is really encouraging because we have seen the same in other arenas like the Task Force for Disclosure on Climate Risks, right? It was initially private and now it's being adopted by jurisdictions. So if in the case of UK, they are already reflecting on us, the US Federal Future Exchange Commission has already taken our guidance. Singapore is also taking it. So if many jurisdictions follow this suit, we will have a comparable a scenario of rules that can be followed and the same culture applying in different contexts. If that's the case, then you will see coming up new futures exchanging, and on top of that, derivatives and forward pricing. Without those sequential elements, talking about forward pricing that everybody would like to, it will be unfeasible. So I think that starting with the rules has been a correct approach. It's been proven to be a correct approach. We will initiate the assessment of carbon credit programs to see whether they align to the core carbon principles. We'll be looking at different credit types, not only nature-based related, but also the other types. And finally, with all these elements on the table, there are complementary tools that can come into play, right? Like de-risking, guarantees, and other force that can come with banking efforts introducing. I have seen great hope on the efforts, for instance, of Rabobank They have a project on agriculture being one of the most high risk profile sectors, right? And so they turn around, they talk to Microsoft, they turn to a Standard Chartered, they mobilize finance, they manage that resource, they facilitate upfront costs for farmers to implement activities, and then the carbon credits are used as a vehicle of payment of that. So if we connect, coming back to my previous point, if we connect carbon credits to impact finance, we will be able to connect the finance that is flowing already through central banks and private banks through thematic bonds issuance to replicate this model. So that's what I just wanted to make the point, direct connection between how this links to a scaling finance. Thank you.
And I just want to remind that there are different ways of funding those projects. Going via international carbon markets would be one. Another opportunity is, as I said already before, is sort of finding private standards, and that would lend the credibility, but that has sort of additional criteria maybe, but that can be really of strong support also for the community then to produce a certain product, be it, for example, cotton, or be it cashmere, or be it cashew nuts, or whatever. So it's not necessarily always the best way to finance a product to go via the international finance markets, depending on the product, depending on the situation in the particular constituency. Then it might be actually worth considering private standards, because then you have this direct relationship between the product that is related to a certain way of producing cashew nuts, cotton, cashmere, whatever. No, cashmere is not really Africa, but different products, different regions. And then you have those private standardization organizations that are sometimes foundations that lend the credibility that the product then gets on the supply chain and gets on the point of sale. So if you have, for example, cotton, and you buy a certain jeans, and that has this tag that it is sustainably produced, and that it is controlled, and that it is sort of having this standard, cotton made in Africa, for example, or so, then you have this impact directly, and you don't necessarily need to sell this on the international market and follow the certain rules, but you have sort of also private initiatives. That also sometimes can be an option for financing sustainability projects.
I would like, sorry. Okay. Just actually, before we wrap up, I want to ask if someone has a question from the audience.
I was curious, but one Thank you. I was curious to really understand the financing model. So, for example, when you do the reforestation, is this like philanthropic money, or is it investor money? Like, I didn't really understand fully the financial model behind it.
Yeah, okay. Thank you for a question. Basically, you ask how we fund our operations and the projects. It's a mix of equity, debt, and also the carbon markets. Equity is as a first point. Then yeah, I mean, again, equity is for working capital mostly, and then the debt and carbon market is actually to deploy mostly of the capex.
Maybe.
Yeah, but the point is that the income from this forest will occur after year 4, 5, 6. So the most critical part is the first 4 or 5 years. After this, we are sustainable, but again, it's a huge negative cash flow within the first 4 or 5 years. So the trick and challenge is always like, okay, how we can survive. Doesn't matter which project, doesn't matter where we do in our approach, how we survive for it, basically for its first 4 or 5 years.
Yeah, maybe kind of look into how the market is currently working with this carbon removal nature-based projects, because very different than RED project. The financial mechanism is and cost base is different. So these projects have quite heavy early year cost, like said, and some of the buyers currently are buying, we call them carbon forwards. So they are, even the carbon is not yet issued or born, like let's say carbon credits are not issued. The projects are selling the rights in forwards basically, and that seems to be quite well working mechanism, but that puts much more emphasis on managing the risk basically, because you could basically do nothing and get the payment. So that's why we've been promoting this milestone-based release of the payments. But it's really what we see is that this, otherwise there are good buyers who are able to finance projects in this way. And I just talked with one East African project which was thinking to finance their project, and they said to me that we need $15 million. And I thought, okay, that sounds a bit challenging to me. That have you considered some kind of other mechanism for this? Because giving a new project 15 million is not a very likely event. So, but this is, I think, market is a little bit moving into this direction.
Maybe I will add on regarding the carbon forwards is that it's a great mechanism and initiative. The challenge is always like, are they also ready to prepay or only commit?
Yeah.
If they commit, then you still need to find a financer who's basically, making a discount on invoice financing. If they are ready to pre-commit and pre-purchase, then you will get the funds. The trick there is that when having a different talks with the different corporates is like they are really actually trying to push down the price. And that's a huge financial pressure in our budgets. Push down the price of the carbon forward, meaning that they will go over the coastlines. Again, I mean, can you do something here? Can you do here something? And then basically we end up an opportunity that the forward is actually below our internal costs. And that's the challenge. It's as a sustainable operation, a project, it's not feasible. So forwards is good, but it's super early still. The whole ecosystem is not there yet.
I could draw separately. We launched two big outcomes fund with 3 times oversubscribed. We like by investors. We got it like for education, not actually for climate. But we got it de-risked by actually government. Like, but yeah, be interested to understand. Yeah.
No? Yeah. This is a question for Antti. What kind of projects in terms of what are the dimensions to scaling products? What is important that they need to share? What is important they need to share? What? Yeah. What is important that they need to demonstrate from a scaling, in terms of scaling the projects that you're looking for? I mean, what are those elements in those?
Yeah, first of all, we prefer ourselves quite careful scaling in the beginning, because there's a learning effect there. So faster you go in the beginning, more mistakes you make, and in this kind of projects, the mistakes can't be easily corrected. You miscommunicate with the community; they never forget that, for example, and but then we are more like looking at how we can scale the number of projects, because it's very local activity. You need to create a relation with the community. Even your seed sourcing might be quite a challenge to manage. That's why we think that the future is rather like a startup ecosystem. than large players on there. We look more into quality than volume.
I think I would add to that because I've worked with Antti on putting together the portfolio for the Great Green Action, and what I'm seeing in my head from all the conversations of scaling is we shouldn't be looking at scaling necessarily because we're working with communities. We should be looking at multiplying. Yeah, so that's kind of the word that I want to start putting into people's mouths is multiplying rather than scaling, because scaling will happen through multiplication. But we've got one project that's currently working with 3,000 hectares. They've got another 14,000 hectares available to them that have willingness to work with them, but it's going to be a whole new project. So there's a multiplication, but that will then give you the scale.
Thank you. Antti, I know that you are.
Yeah, if people want to have more questions, I need to run. Thank you for my.
Just actually maybe keeping you one more minute. Thank you, Antti. One last word actually to close this discussion. One major takeaway from your side after this discussion.
Yeah, I think I was really struck by this point that we heard, that we need to look from the community perspective, what works in the community, what has sort of a chance to become maybe a business model, or what at least has a chance to being really on long-term finance and some long-term back, because otherwise it's just happening in a very short brief of time, and then things will go down the drain anyway. So I think looking at project from the community level of how can this be embedded within a functioning business model? So the business model is not to destroy nature or to emit carbon, but the other way around. I think that is really key of any project, and that will also then help you to get the credibility, which is sort of a really, really important resource in this whole aspect of carbon offsets, that enables you to get those credibilities.
Thank you. I think I'm a strong believer in unlocking the private capital for Africa, because public capital right now is, I think, 83% funding the nature-based solutions in Africa, private capital and 17%. So there is a huge room for development. Now, private capital is for profits. They are looking returns. And now the question is, again, if we combine Africa and nature, then how we can de-risk this, all this risk, what is ahead. So my key takeaway is that I'm really looking forward actually to have this de-risking mechanism as a portfolio offering for the private stakeholders, with the technical assessment, with the feasibility studies, with the monitoring solutions on the way, with 24/7 access to see actually how these projects are doing. I think that will be a key trigger in terms of unlocking not hundreds but billions of USDs to the global south, specifically Africa.
I think that one thing is de-risking, the other one is still we have pending tasks to build trust, and the exercise of building trust is widening the dissemination of the rules. If it is our rules, it's okay. If there are better, they will be welcome. But the market needed a governance arrangement. The Integrity Council is providing a share of it from the supply component. The BCMI is doing the same from the demand side, so that corporations can do right claims. And we have also announced the launch of an Indigenous People and Local Communities Forum, because they are not necessarily beneficiaries. Most of them, they want to become partners, and they want to develop their own projects. So they will have their own standing in this new governance arrangement, and I invite everyone to continue to collaborate. We have set up continuous improvement work programs. It will be great to hear from project developers on those spaces, to see the challenge they face, the lessons they have learned, so that at the end of the day, this is a way that a collaborative community of practice should enable sharing of the lessons so that we can pick up the best practices and disseminate.
Thank you so much. It was a pleasure having you today and this Great Green Action events. Thank you for your attendance. And I hope we, thank you.